Welcome to video 7, where we'll talk about trading styles and types of analysis. First up is trading styles. There are scalpers, day traders, and swing traders, and position traders. Scalpers hold on to a position for a few seconds to a few minutes at the most. Their main objective is to grab very small amounts of pips as many times as they can throughout the busiest times of the day. This is fast-paced and stressful, especially if you don't know your strategy like the back of your hand. You'll spend hours on the charts at the busiest times. The lower the time frame, the quicker your response time, and the less time to think and assess. You're in, bam, then you're out. Anyone that doesn't know what they're doing will just be stopped out constantly. Your margin for error is very low. You can see more details, but we won't go through each one. Next is day traders. They usually pick a side at the beginning of the day by figuring out the trend on a higher time frame and acting on their bias in the busiest parts of the day, and then finishing the day with either a profit or a loss. These kinds of traders do not hold their trades overnight. This is not quite as fast-paced as scalping, and your margin for error is a little bit more because you're not on the 1-minute chart unless it's just to refine an entry for the 5-minute assessment. Then we have swing traders. It's for people that like to hold on to trades for several days to several weeks at a time. These types of traders can't monitor their charts throughout the day, so they dedicate a couple of hours analyzing the market every night or morning to make sound trading decisions. This is ideal if you have a 9-to-5 or if you just find this works better for you and your personality. When I find a strategy I want to try, I trade it on a demo account for 100 trades and see if it's worth refining and continuing. For you, starting out, I would learn a strategy and trade it on a demo account for 20 trades, then try something else. Many teachers will tell you to pick one of these based on your personality, but data won't lie to you. If I listened to this, I'd probably think I'm a scalper, but I honestly think the 1-minute chart is stupid for me to use at this point, unless it's just to refine an entry on a higher time frame. It works for other people, awesome. My data tells me to stay off it, even though it's more exciting. I don't want excitement in my trading. I want as little emotion as possible. Alright, position traders is next as the final trading style I'll talk about. Position traders make trades that last for several weeks, months, or even years. These traders often believe that fundamental themes will be the predominant factor when analyzing the markets, and therefore make their trading decisions based on them. Honestly, the best method here is combining the 3 types of analysis. This isn't a style you use in Forex. So in Forex, you have swap fees. You'll be charged money for holding overnight when trading on leverage. This is what you'll use on crypto and stocks. I also want to mention wash sells. So the reason you want to day trade Forex and commodities and not stocks is on stocks you have something called wash sells. Side note, when I first started the trading Forex, I switched over to stocks because I found it easier. Much of the things I bring up in these lessons are what I wish I was told. In stocks, there's wash sells, which is when you close out a position at a loss and buy the same security or a substantially similar one within the 61-day wash sell period, which means you can't write off the loss. I had doubled my income from the previous year trading, and all my losses in day trading in the stock market couldn't be written off. I was pissed. The purpose is to prevent taxpayers from claiming artificial losses from the sale of securities while essentially maintaining their position in the securities. I don't day trade stocks. You could jump around to different stocks to avoid the wash sell, but I believe trading the same charts gets you familiar with their patterns. I day trade Forex and commodities, swing trade, and position trade stocks. I had mentioned the 3 types of analysis before. They are fundamental, technical, and sentiment. Fundamental analysis is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency prices. I use forexfactory.com's calendar to see events that will impact price like CPI, data being released, or what the data is that's released. If everyone is expecting a higher number than what came out, you're going to see the market react. I typically look at the market before it comes out and play it both ways. And I don't pretend like I know what the data that's going to be released is. Often it's difficult to make sense of after the fact, even if you guess correctly. For stocks, it attempts to identify strong growth potential or loss potential in order to find areas of value by examining the underlying company's business, looking at things like liquidity, debt, revenue, expense, etc. Also the conditions within that particular business's industry and the impact on it from the broader economy. Then we have technical analysis, which is analyzing price trends and patterns on a chart. You will often hear teachers applying a story, or even myself. I'm sure I'll do it. We humans like stories to go along with our patterns. I remind myself constantly, all that really matters is identifying the patterns and supporting them with data to improve my edge. This helps me focus on just recognizing patterns and committing to the data. Removing blame and emotions in your trading is paramount. If you believe institutions are out to get you and you get stopped out and you want to blame it on the people from the narrative you've been told or created, it's not helpful. Take personal accountability and use data to improve, or just accept it as the cost of improving your edge, or that it's one of the unavoidable losses in the exception to your pattern you've identified. Once again, to bring up how many traders fail, think about the way the 3% successful traders think, and how do the 97% think. Be the 3%. Last and probably least is sentiment analysis. It's analyzing the thoughts and opinions of other people involved with the market. The greatest motivator in all markets is fear. If you recognize a pattern and how they will react, you can take advantage of it. For instance, if a CEO steps down from a business, or if the CPI data came in lower than expected, how are people going to react to that? The last one has worked well for me in the stock market. I do believe when you are able to line up all three of these things, you have an extremely strong edge, whatever it is you may be trading. In Forex, I focus on technical analysis and fundamental and sentiment are just catalysts for no particular direction. In other things like crypto or stocks, I try to use all three as confirmations. That's it for this video. Hopefully you found value in this video and understand trading styles and types of analysis. If you found any value in this video, please hit the like button, share, subscribe, and good luck on your trading journey. Thanks.